It's a good start. The Nifty above 17,550 odd.
It's a 70-point cut from the highs, but still maintaining that green on the screens.
Nifty has been in range through the day today. 17,500, twice it's gone there and twice it's seen buying from there. 17,600, it's gone there once and it's seen some selling there.
Off the high closing, but still, 40 points, a 0.25% higher on the index, 17,528.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action and 5 key headlines. I'm Reema Tendulkar and these are the top headlines for the day. Stock markets end in the green even as the rupee plunges to a new low. The sensex reclaims 59,000 despite some gains getting trimmed in late trade. HDFC twins gain as fears of outflows from the stock recede after NSE proposes a change in the reconstitution of indices following mergers and demergers. The proposal, if accepted, will see the stock exit the index not soon after the shareholders nod, but only on the ex-date. Vodafone Idea struggles continue as it loses subscribers for the 17th straight month. The company's board will meet later this week to consider issuing convertible debentures to a vendor. Nestle reports 18% quarterly domestic revenue growth, the highest in the last 5 years, but inflation continues to eat into margins. UltraTech posts a mixed bag. Revenue rises 16%, profits drop 42%, and margins shrink. And the rupee sinks to a historic low against the dollar after the biggest single-day fall in over a month. $1 now costs more than 83 rupees. The Indian currency has lost 2% this month and 12% so far in 2022. And here's the lineup, what we have for you in store today. It's a power pack show, as always, in Market Opinion. Rahul Arora, CEO of Nirmal Bang Institutional Equities. In Big Corporate Voices, Ajay Pyramal, Chairman of Pyramal Group. He expects a double-digit growth in Pyramal Pharma in the coming quarters. But first up, taking stock of the markets, the stock markets managed to eke out some gains despite the very sharp fall seen in the rupee in the last 1 hour. The sensex and the nifty did come under pressure in late trade, but did manage to close up in the green. The gains were about 0.25%. The sensex reclaimed that 59,000 mark, the nifty gaining about 25 points. Banks and mid-caps also ending in the green. Prashant is here with the wrap. Prashant.
I think the story of the Nifty mirrored what was happening in the rupee because vastly different sessions. The rupee started falling in the last 40-odd minutes or so of the equity trading session. And, the market first ignored it and then reacted quite a bit, slipping into the red. By close, we were up for the day, but, a far cry from the first half of today's trading session. I'll come to the rupee in a bit from now, but what came under pressure in terms of the selling was IT. Metals continue to lose 3 days on a trot now, and the PSU bank space, that index had done 8% in the last 2 sessions, saw some profit booking. Silver lining is Reliance. If Reliance continues to participate and pull its weight, that could help the market. In terms of large cap gains, HDFC started strong, closed strong. Nestle, good numbers, beat on all fronts. ITC, Axis and Bajaj were some of the other names. 1:1 on advanced decline. Market breadth also deteriorated. Names like LNT Technology Services, Aarti Industries, Astral, Data Patterns, many had reported numbers, decent numbers like Gujarat Fluoro, but nevertheless saw profit booking. NHPC reversed yesterday's gains, Metro Brands, and a few more. What was doing well in the broader space were names like Container Corporation, again, news-related, Syngene on the back of earnings, Campus Footwear, PNB Housing, V-Mart, etc. I think when you come back tomorrow, the dollar-rupee stability will be important. We'll see what happens there. The level on the Nifty to watch is the 61.8% retracement of the September fall. We got there, but of course, are closing below it. That level is 17,581. And I think global cues in terms of the rally continuing will only add to the confidence of the bulls when we come back tomorrow. Back to you.
Let's get you some opinion. Prashant, thank you very much for that. Rahul Arora, CEO of Nirmal Bang Institutional Equities, says that pharma, cement, auto and auto ancillaries will see the bulk of his portfolio allocation. He also discussed his top bets within the pharma pack. Listen in.
I think I'll probably stay away from export-related stocks, which includes IT as the biggest sort of stay away factor from, even though it's underperformed. I think it'll probably be more domestic, and I think our pecking order sector-wise, even though I was studying be more stock specific, would probably be Pharma 1, Cement 2, Auto Anks 3, and Banks 4. I think if I was to make a portfolio for the next 1 year, that is probably where the bulk of my allocation would be. And I think within that, at least a third to 40% of my exposure would be in pharma. And then you could probably have the remaining 60% divided equally amongst the other sectors. Cement is a very big play because you're 1 year away from a general election when you get into the calendar. So I think government spending on infra projects and others is going to be quite material. If you look at the next 5 years, I think you have about $140 billion worth of branded generics that are going off patent in the United States. Unfortunately, a lot of these are very high competition drugs, so you're going to get into a very high pricing erosion kind of a scenario. So within pharma, I think unless you have a very strong R&D portfolio, something like what a Sun Pharma has, I'd probably stay away from US tilted pharmaceutical stocks. I think Sun has got a good blend of both US as well as India. So I think that would probably be one name that we would definitely play. The other would be Cipla. I think Cipla has got a very large domestic play.
That is some pharma bets. He likes Cipla, but he doesn't like Sun Pharma. In more opinion, Arvind Sanger, managing partner at Geosphere Capital Management, said that the market believes that inflation has peaked. He believes that earnings fundamentals in India look solid. Listen in.
I think certainly over the next few weeks it can get better. It looks like at least global markets were hugely oversold, and I think that we are in the midst of the market thinking that inflation has peaked, and from here things can only get better, and therefore there's a bit of a oversold, hugely oversold, and investors who are hugely underweight. So I think this rally has legs. I think that we're in the middle of this rally. What I'm unsure about is whether this is the end of the bear market or this is more of a bear market rally, which can be very powerful. But that's for global markets. For India, I think the fundamentals are better as long as inflation remains under control. The rupee may go sideways, may even improve slightly. And I think the earnings fundamentals and the earnings story this quarter seems to be off on a solid footing. So I think the fundamentals for the earnings current quarter and outlook for India look solid. So I think the market can, in a global benign environment, the market can continue to do well.
He expects the Indian markets to remain resilient. Now let's get to the second headline for the day. HDFC Limited and HDFC Bank gained between 1 to 3% as fears of outflows from the stock receded after NSE proposed a change in the reconstitution of indices following mergers and demergers. To understand this proposal and the implications for the two stocks, Nigel joins us for more details. Nigel.
Well, that's right. NSE has initiated consultation on the matter of reconstitution of indices in events of mergers and demergers. And the exchange has sought feedback by the next couple of weeks, that's 2nd of November. Currently, right after the shareholders' approval of the merger, the stock of the merging company is excluded from indices and replaced with a new stock. However, the proposal, if it's accepted, states that the stock will be removed, but not after the shareholder nod, but only on the X date. This will lead to passive holders automatically holding HDFC Bank, as their name will come on record. The key rationale for this is it will address the longer exclusion as well as multiple adjustments to indices, especially given the rise of ETFs and index funds. Additionally, the exchange will announce the new company to be included in the index on the X date. Novuma Alternate, well, they believe that now it's unlikely that HDFC gets excluded from the Nifty, which was earlier the fear, and they had earlier estimated $1.5 billion of outflows. Post this consultation paper and post the release from the exchange, well, a bit of a rally on the HDFC group.
Okay, remember HDFC Limited has a near 5.6% weight in the Nifty, and had it gotten deleted after the shareholder nod, as Nigel pointed out, it would have resulted in outflows of nearly $1.5 billion. At least that fear for now has receded. Thank you very much for explaining that. Let's get to the third headline for the day. As per the telecom regulator, in the month of August, Vodafone Idea has lost subscribers. They've lost nearly 20 lakh subscribers, making it the 17th straight month of losses. Reliance Jio, on the other hand, has added the most number of subscribers in the month gone by, in the month of August, adding close to about, that number will come up for you on your screen, Reliance Jio has added the most at close to about 32 lakh subscribers, while for Bharti Airtel, it stands at 3.2 lakh subscribers. The fear in the market is that, Vodafone Idea continues to lose subscribers. 17 straight months, and in the last 12 months, it's lost nearly 1.8 lakh subscribers. The street is worried about, will the company continue to lose subscribers? And if they need to defend their market share, they need money. And as of now, at least, money has been difficult to come by. They are planning a fundraise, sort of a fundraise. They're issuing some securities to a vendor on the 21st of this month. There is a board meeting which is scheduled wherein the company is going to propose the issuance of a convertible debenture to a vendor. But this is probably going to be money which will go back into the vendor. The vendor will issue some money. In lieu of that, they will get that convertible debentures, which can then be converted into equity at a later date. Fresh money into the company is unlikely to come through. And the risk is that if that doesn't happen, then the company continues to lose subscribers. Now, the company has identified 17 circles as priority. The balance 6 circles are not priority because it constitutes only 2% in terms of the revenue market share. But those 6 circles still have 1.6 crore subscribers out of a total base of 25 crore subscribers. So the street fears that these subscribers stand, the company stands to lose these subscribers. So that was a fear on Vodafone Idea. Meanwhile, let's talk about Tata Communications that fell over 0.5% despite a decent set of Q2 numbers. After a few sluggish ones, the international business is showing signs of picking up, and the company holds on to its margin guidance of 23 to 25%. Amur S. Lakshmi Narayanan, the MD and the CEO, says that they've seen significant margin improvement over the last 3 years. Margins were at 16% and now closer to 25%. And the next focus is on growth, and they're looking at double-digit data growth. Listen in.
3 years ago, we were 16% EBITDA margin, 7% ROCE. Today, we've got it to 25%, the ROCE to 27%, and good balance sheet with net debt reduction. So we call that as the phase 1 of the transformation is done. Now we are focused on sort of the phase 2, which is to get ourselves onto the path of growth. This quarter, we have had a very healthy growth on the data. But last quarter was a little less. We are, converting better from our pipeline, and our pipeline is increasing. Our international markets are beginning to show growth. Of all the markets, barring 2 markets, we have registered very, very good growth. And we would hope that when we fire on all cylinders in all the markets, we should be hitting the double-digit growth sooner than later.
On that note, we'll slip into a break. We'll come back in a jiffy with the other headlines. Welcome back. You're watching Markets Today on CNBC-TV18, and this is the 4th headline for the day. UltraTech Cement ended 1% higher after an in-line set of earnings in the second quarter. The top line coming in better than street expectations on the back of higher realizations. Nigel is back with us with the details. Nigel.
Well, after the numbers that we saw from the other cement peers, UltraTech Cement's numbers actually look pretty good. They're more or less in line. There was no negative surprise, which was positive. But there was no big positive surprise as well. If you're looking at the top line, it was a little bit better than what the street was working with. EBITDA number as well, a little bit better. Margins more or less in line, while the profit number as well did look pretty good. So it was a top-down beat actually, though mildly so. On the top line, volumes were bang in line with what we were working with. Volume growth of close to around 8% on the Indian volumes. That was pretty much what we were working with. So the surprise came on the realization front. The margins, though, they continue to remain under pressure. Power and fuel costs spiked up. The average diesel cost was up by close to around 5% on a sequential basis. And there was an increase in cost of raw material, whether it was fly ash, slag, or even gypsum. The blended fuel prices on a per ton basis, that was at around $185 in quarter 1. That moved to around $200 per ton. On a year-on-year basis, that number compares with around $120 per ton. The good news, though, is that this is likely to have peaked out. So from here on, we should see some bit of recovery on the margin front. The net debt number, that increased by close to around 3,000 crores odd, but that's because they're undertaking some expansion plans. The problem is that, in fact, the working capital as well did get elongated, but no negative surprise, as I said earlier, and things should improve from here on. This is the big daddy of the cement industry and trading at a bit of a discount. and that's why that ended in the green, though in fact there was a very, very small margin miss.
Thank you very much for that. And here is the fifth headline for the day. FMCG major Nestle gained close to about 2% after it reported a mild beat in the third quarter. The company's revenues, EBITDA, coming in higher than street anticipating. Mangalam is here with the earnings fine print. Mangalam.
Well, Nestle reported a top-line beat in their third quarter of calendar 2022, with the revenues growing around 18.3% as against street expectations of around 13 to 14% growth. And that's actually trickled down to the bottom line as well. So the revenue at just shy of 4,600 crores is above street expectations of just a little less than 4,400 odd crores. EBITDA coming in a little over 1,000 crores, again, a poll of, little under 1,000 odd crores. And that means that the net profit at 670 odd crores is above street expectations of 650 crores as well. The domestic business led their revenue growth. 18.3% is the growth that we saw, and that's the fastest that we've seen the company grow in at least the last 5 years. And export sales too increased by around 15.7 odd percent. The company says the entire growth was broad-based, double-digit growth led by volumes as well as mix evolution, and they've seen growth strong in specifically in large metro cities, even as smaller towns are catching up. The only fly in the ointment for the numbers this time around would be margins coming in at 22.1% as against expectations of 22.7%, and that's because gross margins have continued to dip for Nestle, and at 52.8%, they're at a multi-quarter low, if not the lowest ever for the company. However, on that as well, the management tried to soothe the frayed nerves. They're saying that early signs of stability in edible oils as well as packaging materials is what they are seeing, so that could support the margins going forward, even as prices of fresh milk, green coffee as well as fuels will continue to remain firm. For Nestle, the stock has underperformed this year and trading at around 61, 62 times. Let's see whether this beat on the top line is enough for the street to take a look at Nestle once again, primarily because they're also going to soon get the pet care business into their fold.
Mangalam, thank you very much for that. Sticking with earnings, LNT Technology also reported a pretty good quarter in line with street expectation. A constant currency revenue growth of 4.5% in line with expectations, a beat on the margins. Despite the pressure coming through on margins due to wage hikes, the margins were largely resilient. The company's MD and CEO, Amit Chadha, said that Q3 will be a bit subdued. They will see growth, but it's going to be a bit subdued. Q4 onwards, they will see strong growth, and the margin guidance is EBIT margins of 18% plus over the medium term. Listen in.
I do believe that Q3, we're talking about a subdued Q3 because we do believe that, so if you look at the quarter, this time you had Dussehra, you have Diwali, you've got Thanksgiving, New Year, Christmas, all of it in the same quarter. Generally, Dussehra would come in Q2 and you would have Diwali in Q3. This time everybody decided to go on vacation at the same time. So I do believe that that Q3 will be slightly subdued. We'll see regular furloughs. Q4 we are back on is how we see it right now. Our aspiration is to remain in the 18% EBIT range for some time now. There are multiple $5 to $10 million wins that we have had this quarter. So overall, our TCV wins that we had last 2 quarters or the last 3 quarters has not declined. It's actually stayed stable. However, the color of those deals has changed. I do believe coming in, looking at our pipeline right now, that quarter 3, we will come back and announce a lot more number of $10 million wins, but that's to be seen the quarters in play. Reiterate that we'll get to $1.5 billion run rate in FY25.
Okay, while companies are shying away from giving an outlook on the on the industry and the company, given the macro uncertainty, LNT Technology has a FY25 revenue guidance of $1.5 billion. But the stock saw a bit of profit booking. But here is the biggest headline. This is our 5th headline. The rupee is at a record low. $1 now costs more than 83 rupees. The Indian currency is down 2% this month, 12% so far in 2022. And the slide that we saw today was the biggest single-day fall in a month. Ritu is here to explain what happened. Ritu, some very big moves seen.
Well, that's right. The rupee fell 66 paise today to post its biggest single-day fall in a month. It is a record low for the rupee, versus the greenback is surging US Treasury yields, prompted a broader rally in the US dollar. Now, the rupee ended at a historic low of 83.02 against the dollar. It is now down 2% this month and nearly 12% so far in this year alone. Now, the US 10-year yields also surged above 4%, and these have yanked up yields globally. And these rising yields and stronger dollar have actually pushed the rupee down further. Bond yields and equities, in turn, have been rising because the runway to growth appears clearer than perhaps some time ago. Now, other Asian currencies also weakened, so rupee was not the only one. But with today's move, the rupee has breached that psychological support level of 82.30 to 40, which is leading importers to also rush to buy more dollars and test that limit as well. Traders also told us that there was large dollar demand coming in from a public sector entity, which also to an extent contributed to the rupee fall that we saw today. Now, while there was no RBI supply at 82.30 levels, dealers did tell us some support emerged when the rupee touched around 83 to the dollar.
Thank you very much for that. Meanwhile, Jayesh Mehta, MD and Country Treasurer of Bank of America, said that the rupee volatility will continue for the next few months and the situation may only improve next fiscal. Listen in.
Market was very well anchored, at 80 to 40. Just like earlier, we were at 79.90. At 80 to 40, it was anchored. Last 2 days, dollar index was slowly creeping up, but we were anchored well at 80 to 40. And today, when whenever there is a level which is anchored and then you don't find support, people try to find the new level, and that's what actually happened. So I would say next 2-3 months, it's going to be completely volatile, right? So and there is no fundamental, even the finance minister says it's nothing to do with rupee per se. It is next 1 year, maybe next financial year, first quarter, next financial year. But till that, we'll have to live with the world volatility.
Pyramal Pharma shares hit lower circuit after listing today. The demerged entity from Pyramal Enterprises was listed at 200 rupees per share. Speaking to CNBC-TV18, Ajay Pyramal said they're happy with Carlyle's shareholding and are focused on building the existing businesses.
Carlyle holds 20% in the listed entity. Any plans of them probably increasing stake or diluting it from current levels?
I think we've been very happy with Carlyle as a partner, and we're going to hope to continue the relationship with them.
Any change in?
So they are not going to increase their stake, and I don't see them decreasing their stake.
Moving on, the insurance regulator is unlikely to improve the valuation methodology for the second leg of the Axis Bank Maxis Life transaction. The regulator is of the view that Axis Bank must buy the balance 7% stake it is due to acquire in Max Life at a uniform and fair market value. Yash is here with more details.
Well, that's correct, Rima. So just last week, there were 2 orders which came out from the regulator, which essentially penalized both Max Life Insurance and Axis Bank for violations in the Axis Bank Max Life transaction. Do remember, Axis Bank intends to acquire a total of 20% stake in Max Life Insurance, out of which 13% has already been executed. Now, the reason for the earlier 2 orders was that there were violations of fair market value as well as uniformity in price per share of these transactions. Now, what we've been given to understand is when we speak about this balanced 7% stake, which is intended to be acquired by Axis Bank in Max Life, that's where the regulatory pressure has come. The regulators of the view that this balanced 7% stake will have to be acquired at a valuation which will be uniform to the previous transactions and also at a fair market value. A proposal will have to be made to the regulator giving justification why the 2 entities think a particular price is a fair market value, and if the regulator allows, only then the Axis Bank will be allowed to acquire that stake in Max Life Insurance. Now, important question which really emerges out of this entire thing is that one is what will be the fair market value and what will be the way in which it would be assessed. And the second one, when Axis Bank has already acquired 13% stake at a much lower price, would the shareholders of Axis Bank be comfortable with acquiring the balance 7% stake at a much higher price?
Thank you very much, Yash, for bringing us this update. With that, we're out of time on markets today. Thank you very much for watching.